Hello everyone, welcome to this video. Hey ChartCypher fam, assemble. Today we're talking about everyone's favorite chart pattern companion, the moving average, the MA crew, right? The MA crew, the simple moving average, the SMA crew, the exponential moving average, the EMA crew, you name it. They're everywhere promising you to smooth out price action, reveal trends. But hold on, they're holy grails of for trading? I don't think so. Or they're just chasing a mirage. Okay, let's get started with this video, right? So the moving average, a double-edged sword. Moving average can be very helpful for you, to smooth out the price action, to simplify the price action, like where the trend is going and all that. The slope of moving average can indicate if price is generally going up or the price is going like the down, like going up or the down. Look at this red one. You can actually easily show the where the price is going. But the main problem with this, they are lagging indicators. They're lagging indicators. They cannot predict the future. They cannot predict the future outcome of the market. A market is pretty complex stuff. There's like whole emotions going on, like people are buying selling all the time. But moving average try to smooth out the price action. You can use it for that. I mean, you are good to go with this. But why I do not use in my chart is for because they are lagging indicators. It's like trying to predict the weather by looking at yesterday forecast. It is impossible, right? Every single day, every single moment is a new, it's unique, right? The same goes to trading. Every single candle is unique. You cannot actually predict or like like showing one things there is gonna work out like longer time. I will actually do an what is it called, bar replay tool, and show you why it's pretty bad, right? I just in here euro AUD, and so let's also move forward. So it's give false signals, like moving average always give you false signals. If the market is ranging, like if the market is doing this, the moving average get confused. It's give you false signal all the time. Price can bounce around moving average, making it difficult to pinpoint entry and exit. Like look at this shit. Price price you think is gonna go up, then just doing squiggly little stuff and ranging. So you'll get lost in this scenario. You cannot get an entry, pinpoint entry with the moving average, right? About simplification, I know I told you before that moving average simplifies the trading by making sure price action is pretty smooth, but market are complex. You and relying on solely in the moving average can lead you to miss important price action. So I will show you why moving average sucks, or how to improve it. So we are in a downtrend, so let's actually buy. I think price is overextended, so I'll buy here. And also I see that price actually made it in higher high, so I think it's gonna go up from here. So let's see how price is doing. Oh, if you think about moving average, look at this. Price going up, price coming back. So you might think, hey, price might like go in there and like moving average crossover or whatever you think, right? In market, you think, hey, moving average is crossing over, so let's actually sell here. You're staying ahead of the fucking market. So what you do, you sell, and you just add a sell here, and when and just see, you got stopped out. I mean, I didn't put the stop loss. Let's say stop loss here, then you get automatically stopped out, right? That's what I try to say. Like, you think, hey, moving average actually crossing over, so let's sell. Then market goes up. That's why it's lagging. And when it's range like this, it's pretty bad. Trust me on this. I actually trade a lot of money with this and lost a lot of money. You'll actually how I trade and all this in later videos and all the stuff. Okay, so and I will also upload like a lot of back test, so let's say moving average crossover happened where like it went up, like you would have bought here, I guess, maybe here, I don't know, maybe here, I don't know. There is really hard to pinpoint like where is your entry should be, right? Okay, so yeah, let's actually extend this price action. Let's find another signal, rejecting the moving average, the YouTubers actually say, or the YouTube gurus actually say, hey, price actually rejecting it, so buy here, right? Okay, let's see we can. Okay, so think about it. Your guru says price rejecting this here, then you buy. You put a stop loss in recent low like here, and take profit 1 to 2 maybe, and then you put a trade and you lost. Oh, my bad. I didn't put the sell order here. Okay, then again you think, hey, here this might bounce, right? This might bounce, and there's an uptrend and all that. This might bounce, sell. Let's get in, right? Let's buy here in 10k with the 10k lot size. I mean, I don't know, standard lot size 0.5 maybe. If you just calculate it, maybe it will say zero point 0.5 lot size in AUD, Euro AUD, or whatever pair you're trading, right? So you buy here thinking like it should be, entry should be like way over here, rejecting the moving average. You buy here and stop loss, let's say red. That's what the guru says, like YouTube guru says that put your stop loss in the 100, I don't know, 200 moving average, right? 100, okay, 200 moving average, and you will be profitable. That's what they're saying. But let's say 1 to 2 risk to reward ratio, like $1,000. Let's see whether this trade work out or not. See, in case sometime I told you it works, sometime it doesn't work, so you never know. It's like 50-50 chance with this. So I mean everything is 50-50 in trading, but it's way worse, like 30-70, 30% time you win, like 70% time you lose. I mean, this is the statistic in this moving average and all that. Okay, so again, the price is crossing over and you are in uptrend, so what do? You buy here, right? This is the idea. And you buy here, stop loss, I don't know, stop loss here, take profit, let's say 1 to 2, right? Let's see how this work out or not. Okay, so you get liquidated way over here, like in here, right, on the spread and all that. So you lose money once again. Let's say again. Okay, see, this is a little rejection, so you get in, right? So you get in and recent swing low and go 1 to 2, right? You buy it here and let's see. Fuck, I didn't even put the stop loss, and you liquidate it. Okay, so this, as you can see, is pretty bad. It's pretty fucking bad. If you use this, it's pretty bad. You'll lose all your money with this shit. So that's why I'm saying, look, you should not use moving average. You should only use like me, like my strategy is using support and resistance, right? And using trend line with this regression trend, you know and also I use like, let's remove this, I use higher high higher low strategy. Like, look at my chart right now. Holy shit, bro. Look at this shit. Okay, so this, remove this lines and all this stuff. Okay, so if price making higher high, you are in uptrend. Price making higher high, you are in uptrend. If price making lower lows all the time, lower low, you are in a downtrend. This is like the idea here. You should use 10, maybe 10 10, so it's smooth out, or you could use whatever you want. You could test it, test this. I'll in my strategy I would have just sell right in the, because it made lower low, so I sell, like a sell. See, my strategy is working like 70% of the time, and I add in another sell. It's made lower low, so I'll add another sell, I guess. you know I'll add median lower low, so I'll add another sell until like from here, or like here, until this price level or support level, whatever you call it, until this supply zone, whatever you call it, bro. Then I'll just take my profit and get the hell out from the market. You see that? This is how I trade. This is how you should trade. You should not use this stupid as what is it called, stupid as SMA, or like EMA, TMA, whatever you call it. It sucks, bro. So thanks for watching, and hopefully I'll see you in another video. Goodbye.